Welcome to the deep dive. You know, where we take that stack of sources, all the articles, the earnings reports.
The fire hose of information.
Right. And we try to cut straight through to the insights that, actually matter.
Get to the core.
And today, we are strapping in, I think that's the right term, for a deep dive into SharkNinja's Q3 2025 performance.
Yeah, and it's a big one to unpack. Because the context, 2025 has been defined by just massive upheaval, hasn't it?
Absolutely. Supply chain chaos. We've seen high inflation, lots of consumer uncertainty everywhere.
And frankly, most companies in this home goods space, they're either contracting or just struggling to tread water.
But SharkNinja, they're positioning themselves completely differently. They're actually calling themselves a true outlier.
Right. Not just surviving, but aiming to triumph, as they put it, and aggressively grab market share.
They pin this on what they call an outrageously extraordinary mindset, which sounds great, but...
But our mission today is to look past the slogans, right? We need to unpack the tactical reality. How are they actually doing this?
Okay, so we'll dissect the numbers, look at this really broad innovation strategy they have.
And their global expansion plans. It all seems to trace back to this core culture they talk about.
Which is?
Two things, really. One, this focus on positively impacting people's lives. And two, what they call an existential need to be the absolute best in any category they decide to enter.
An existential need. Okay, that's quite a statement.
It is, but let's see if the numbers bear it out.
Perfect. Let's start right there.
Yeah.
You mentioned stellar numbers. How does Q3 actually look in black and white, especially compared to everyone else feeling the pinch?
Well, it was exceptional. I mean, this marks their 10th straight quarter of double-digit organic top-line growth.
10th in this market.
Exactly. That consistency is, it's almost unheard of right now. Net sales specifically grew 14.3% year over year,
Okay.
reaching $1.63 billion.
That's impressive growth. But the real story, especially now with costs being what they are, has got to be profitability, right? How are they managing margins? Tariffs are still high, supply costs.
That's actually where it gets really fascinating. Their adjusted gross margin, it expanded 90 basis points.
90 basis points. Oh.
And for the first time since they listed in the U.S., it broke the 50% barrier. Came in at 50.3%.
Wow. Over 50% gross margin.
Think about that. For every dollar of product they sell, more than 50 cents is left over before operating costs and profit. That's building a real fortress, financially speaking.
And that strength, that must flow right down to the bottom line.
Precisely. It drove operational efficiency gains. So their adjusted EBITDA, that's, earnings before interest, taxes, depreciation, amortization, basically a key measure of operating health.
Right.
That grew nearly 21% year over year, 20.7% to be exact, hitting $316.5 million.
Okay.
And for you listeners tracking the investment return, adjusted net income per diluted share saw an incredible jump, up 24.0% to a record of $1.50 per share.
24% increase per share. Okay, so financially, they're firing on all cylinders. But let's zoom out a bit. Are they just riding a wave in their market? Or is this something else?
No, this is the key point. They're actively making the wave. Their internal data suggests the total U.S. market they compete in, so vacuums, kitchen stuff, all of it actually declined slightly year over year if you take SharkNinja out of the equation.
Really? The overall market shrank?
Slightly, yes, excluding them. But their own point of sale data, their POS, it grew in the low double digits. And it actually accelerated later in the quarter to mid-teens growth.
So they're not just growing with the market, they're actively taking share from competitors.
Aggressively. They are effectively cannibalizing their competition's sales.
Okay, that paints a very clear picture.
Yeah.
And before we jump into the products driving this, we should probably mention the CFO situation. Adam Quigley is now confirmed as permanent CFO.
Yes, that's right. He's been with the company over 11 years, deep operational experience. He was key in navigating those tariff challenges a few years back.
Right, the mitigation strategy.
Exactly. So his confirmation signals, I think, a focus on continuity and that deep financial know-how as they continue to scale globally.
Makes sense. All right, let's talk strategy then. This execution has to come from somewhere. They talk about a three-pillar growth strategy. And pillar one sounds, almost chaotic, expanding into new and adjacent categories.
It does seem random at first glance, but it's quite strategic. They're now officially in 38 subcategories.
38.
Yeah. They don't see themselves as just a cleaning company anymore or just a kitchen company. They view SharkNinja as a platform for solving consumer problems through innovation, wherever those problems might be.
And the Q3 launches really highlight that, don't they? You mentioned the Ninja Fireside 360, an outdoor heater and a fire pit.
Right, designed to solve real issues people have, like poor heat distribution from regular fire pits or cleanup hassles. Pure problem solving, but yeah, a long way from a vacuum cleaner.
Or a blender.
Okay.
And then in the same quarter, they leap from the backyard into skincare, with Shark Beauty expanding.
Exactly. They introduced the Shark CryoGlow. And according to Circana data, it became the #1 skincare facial device brand in the U.S. in under 12 months.
Okay, hold on. #1 in skincare devices in less than a year, from a company known for vacuums.
It's a huge stretch, right? And you have to ask, is there a risk of diluting the brand? Like, we trust Shark for suction power. Why trust them with a hydro-fueled facial device?
Yeah.
That's the gamble. They're betting that consumers trust their engineering and their problem-solving approach more than just their history in one category.
And it seems to be paying off.
Early signs say yes. Look at the Shark Facial Pro Glow. That's the hydro-fueled device promising spa-level results in 10 minutes.
Okay.
It generated a 25,000-person waitlist before launch.
25,000 for a facial device. That's like iPhone-level buzz.
Pretty much. And when it launched on Amazon, it sold out in 3 hours.
How do they do that? Consistently generate that kind of viral demand? Not just for their core stuff, but for something totally new like high-end beauty.
It seems to be a combination, a really sharp launch strategy leveraging social media influencers, but then crucially, backed by a product that actually delivers on its innovative promise.
So it's not just hype.
Apparently not. And that contrasts the outdoor fire pit launching alongside the high-tech facial device. The CEO called that the magic of SharkNinja. They're chasing breakthroughs wherever they see a consumer problem they think they can solve better.
Okay, that's pillar 1, relentless expansion. What about pillar 2? Growing share in their existing categories. They can't just ignore the base, right?
Absolutely not. That core business funds all the adventurous stuff. Pillar 2 is about reinventing the base, as they call it.
What do you mean?
Basically innovating within their successful core lines to speed up the replacement cycle, make their own older products feel outdated, encouraging upgrades.
Okay, smart, like in cleaning.
Yeah, we see robotics gaining traction for them, and especially their big move into extraction cleaning.
Ah, the Stain Striker platform. You mentioned they went from 0 to a meaningful share pretty fast there.
They did. And the latest innovation is the Shark StainForce cordless system. But what's really interesting is the marketing angle.
Go on.
They've coined this term stainsiety.
Stainsiety.
Yeah, the anxiety and stress you feel when a spill happens. They're not just selling a stain remover, they're selling relief from stainsiety. It's clever framing.
That is clever and very relatable. It's marketing the feeling, the benefit, not just the tool itself. Are they doing that elsewhere?
Definitely. Look at lifestyle products. The Ninja Blend Boss.
The portable blender.
Exactly. Their first tumbler blender, designed for on-the-go wellness. It's super powerful. They guarantee it's 100% leak-proof. And it went viral. Millions of impressions on TikTok, Instagram.
So, tapping into that portable health trend.
Precisely. Taking an older category blending and updating it for how people live now, not just stuck in the kitchen.
And they're still leaders in air frying, which they practically introduced to the mainstream U.S. market.
Still crushing it. The Ninja Crispy Pro, their new glass system air fryer with extra large capacity, just reinforces their dominance there, keeps things fresh, even as tons of competitors jump in.
Okay, so strong innovation, core categories too. But none of this happens without serious marketing muscle to create demand.
For sure. And they are really stepping up their game here, expanding their global brand ambassador roster significantly.
We're talking big names, right? Kevin Hart, Tom Brady.
Yeah, huge names with global reach. It's a major investment, and the content is getting more sophisticated too.
Right.
Well, there's a new digital series with Kevin Hart and David Beckham, kind of blending comedy and product placement. And then you saw Tom Brady using a Ninja Crispy Pro during that big roast event recently.
Subtle. Well, maybe not so subtle.
But it's targeted, diverse content, and they're expanding their influencer network globally, too, driving localized content in Latin America, Europe, the Middle East, all feeding into Pillar 3.
Which is international expansion. And the growth there is really accelerating, isn't it?
It really is. International net sales growth jumped significantly in Q3. It hit 25.8% year over year. That's up from 20% growth in Q2.
Wow, quite a jump.
It shows this isn't just a North American story anymore. They're genuinely scaling up globally.
And the UK seems like a good example of how their strategy is working overseas.
Absolutely. The UK business growth dramatically reaccelerated, their words. Hit 27% net sales growth year over year in Q3.
Compared to only 6% the quarter before, what changed?
Diversification. The new products, espresso machines, beauty tools, fans, they really kicked in and more than offset the expected slowdown in the now mature air fryer market there.
So the multi-category approach provides resilience geographically too.
Exactly. And their move to a direct sales model in places like Mexico seems to be paying off handsomely as well.
How so?
Mexico is still a standout performer. It's leading what they describe as broad-based triple-digit growth across Latin America overall. That success is fueling their big goal.
Which is?
The target, short to midterm, is to have 50% of the entire company's business coming from outside the U.S.
Half the business internationally. That's ambitious. How are they approaching new market entries now? They had some bumps before, right?
They did. They seem to have learned from that. They've moved away from a disruptive Big Bang transition where they switch everything over at once.
Okay, so what's the new model?
It's smoother, more strategic. They establish direct relationships with the major big retailers in a country, but then they partner with distributors to handle the secondary and tertiary smaller retailers.
A hybrid approach.
Yeah. They're rolling this out now in places like Spain, the Nordics, Poland, Italy. It feels more measured, but still relentless.
And to support all this growth, especially finding the right talent, they're investing in infrastructure back here too. Mentioned a new design center in Manhattan.
That's right, Midtown Manhattan. It's positioned explicitly as a great magnet for talent. They want top people in design, PR, media buying, social media content creation.
Supplementing the teams in Boston and London?
Exactly. It shows they're serious about building the creative engine needed to keep this pace of innovation going.
Okay, let's circle back to the financials for a minute,
Yeah.
specifically that amazing margin expansion. You mentioned tariffs are still a factor, around 19–20% from China, Vietnam. So how did they boost profitability despite that?
Right. This is where their operational chops really show. The primary driver they cited was cost optimization through value engineering.
Okay, value engineering. That phrase can sometimes be code for, making things cheaper, maybe lower quality. Is that a risk here, cutting corners to hit margin targets?
It's always a risk you have to watch with that term. But the company emphasizes it's more about optimizing product design for manufacturing efficiency, smart sourcing, reducing the bill of materials without compromising the core quality or function that consumers expect from them.
Okay, so design optimization, not just cheaper parts.
That's the claim. They also benefited a lot from supply chain diversification. That dual source model helps reduce reliance on any one region. And importantly, a big factor this quarter was the end of a 2-year sourcing services agreement they had with JS Global. That ended July 31st.
Bringing sourcing more in-house.
Effectively, yes, giving them more direct control, potentially more efficiency and cost savings there.
Got it. And looking ahead to the holidays, always a crucial time. How's their inventory situation? Are they stocked up to meet the demand they're creating?
They report inventory levels are healthy, up about 7.6% year over year. The key thing is they've worked through most of that strategic inventory they pre-built late last year and early this year because of tariff uncertainty.
So they're not sitting on old stock.
Seems not. They sound well-positioned with fresh, current inventory for the holiday season surge they're obviously expecting.
Okay, and the ultimate proof of confidence, I suppose, is raising the full-year guidance.
Yeah.
What are the new numbers for 2025?
Yeah, they bumped up the outlook across the board. New net sales guidance is for an increase of 15.0% to 15.5% for the full year.
Up from 13–15% previously.
Right, and the new adjusted EBITDA forecast is now $1.115 billion to $1.125 billion. It's just a clear signal they expect this strong performance to continue.
It really is a phenomenal case study in resilience, isn't it? In this tough environment, SharkNinja seems to be thriving. This outrageously extraordinary mindset, as they call it. It seems to be backed by genuine execution.
Relentless execution, yeah. Plus that continuous innovation across such different categories and the smart global strategy. It all adds up to a diversified, resilient model.
They really are actively defining what a modern, agile consumer goods company can look like. It's not just about appliances anymore.
No, they're rewriting the rules on brand elasticity. How far can you stretch a brand if consumers trust the core engineering and that problem-solving promise?
Which leads to the big question, maybe for you listening to think about. Given this rapid, successful expansion. I mean, from outdoor fire pits to high-tech facial devices and this proven knack for driving viral demand. How might SharkNinja's strategy, this category diversification, combined with constantly reinventing their core products, ultimately redefine what a single home or lifestyle company can even mean on a global scale?
It feels like their boundaries are only limited by the next consumer problem they decide they can solve better than anyone else. Definitely something to keep watching.
Absolutely. Well, that's all the time we have for this deep dive. Thanks for joining us.
Thanks, everyone.
We'll catch you next time on the Deep Dive.